Yo, 2 years of dividend investing, and these are the results. Today, I'm going to share absolutely everything about my dividend investing journey that started exactly 24 months ago. How much I invested, how much I've made, the income it'll be generating for me every month of this year going forward, all of it laid out before you. If you haven't seen one of the previous 23 videos, this is an ongoing dividend investing series I started in January of 2023. And every month I make a new video that reveals my account and what moves I've made and things like that. So if you want to see how badly I've done in the past, you can go back and watch those, or you can subscribe now to see what's happening in the future. To save you from a boring video, I'm going to go over my January dividend investing results first, give you all the numbers that happened and the income that I made. Then we'll go over the history of the account and I'll give you a chart that shows all the dividends I've had over time. I wanted to see, like, is it growing over time? Is it totally flat? Like, what's happening over the course of time? And is this giving us hope that dividend investing makes sense? And then lastly, I'll share what I'm going to be investing in for the rest of 2025 because I've taken a major new direction this year. It's time to get a little more risky, time to chase after a little bit higher yields. And that could be a little bit scary, but let's go for it. So in the month of January, I contributed $10 from referrals from you guys signing up. That's 2 people signing up through my link. Thank you very much. If you're going to sign up for Robinhood, use my link below. We both get $5 of a free stock. I always choose Coca-Cola because they're a dividend payer. Then I also had $180 in uninvested cash that was sitting there in the account doing nothing for me, so I may as well do something with it. And here's a little preview of what's coming up in the future, the riskier dividend investing moves going forward. I invested $180 in Trin. Trin is a ticker symbol for Trinity Capital, and here's their website that's got a lot of moving pictures going on. An international alternative asset manager. Here's their basic info via Yahoo Finance. The stock price overall has been relatively flat since inception as far as the data that Yahoo's showing us here. The PE ratio is still really low though, 9.29. And the forward-looking dividend and yield is $2 basically per share that you own, and shares are only $15, which means it's a 13% dividend as of right now. I warned you we were getting aggressive. So in the month of January, these are the dividends that I got. A lot of the usual suspects here from the JEPQs, JEPIs, AGNCs, and all that adds up thankfully to another month over $100. I love it when we hit a triple-digit month. It just feels so much different than a double-digit month. It obviously means more burritos and race cars for our life, but I think it's just really exciting. So then if we do the math and we figure out just this month's return in isolation, that's only 0.35%. That doesn't really tell us the whole story. If we extrapolate that return out and we got that same amount for every single month of the year, that would be equivalent to a 4.15%. So not terrible in terms of dividends, but that's also still basically just like a high yield savings account. I know someone in the comments is going to be like, dude, you could just have a high yield savings account and you wouldn't have any risk. You're not wrong. We're not doing really any better than that right now. And then one of the new metrics that I added to the spreadsheet this year is if this portfolio was a full-time employee of mine. I really like thinking about investing in terms of this is our money going to work for us. Our money has become our employee. It's not just something that we spend to get new cool stuff. I'm not going to buy the iPhone 17 this year. Actually, I might. But instead, we're going to use that money to generate more money for us. So if I was doing this and it was a full-time employee working 40 hours a week, what would that hourly pay equate to? So in 1 month, I made $105 basically, divided by 160 hours worked per month. That's a pay rate of 65 cents per hour. Nothing too exciting yet, but once that crests $1 per hour, that's going to be exciting. Once that crests $10 per hour, that's going to be really, really exciting. So those are the kind of future goals I'm looking forward to. Yes, I'm just inventing metrics that are going to get me excited. I'm inventing things to track to keep me kind of engaged in this because I like numbers. So because it's just the first month of the year, that is our total dividend number for 2025 thus far. Our total return thus far is only 1 month and it is going to be incomplete until end of year. So that's not really that exciting of data just yet. I just realized my font of choice for Google Sheets is Oswald. And I just watched the first episode of The Penguin. Oswald Cobblepot. For that reason, the secret comment word for today is penguin. All right, I'm setting my watch because I want to do a quick synopsis of what's happened all together with my dividend investing journey. I'm going to shoot for less than 3 minutes for the whole synopsis. If you want to fast forward 3 minutes and see what my investing plan is in the future going forward in 2025, go ahead, set, go. So in January of 2023, I contributed $704 to this account. And of course, because it takes a while for those shares to land, for you to hit some dividend dates, you don't get dividends right away. So in the month of February, I put in 12 more bucks, but I only got one little dividend, basically $1 from EPD. It took a full 2 months for those dividends to start finally rolling in with the things that I invested in. Even then, I only got $4 in dividends in the first month. For me, dividend investing really feels emblematic of what it looks like to invest, which is it feels so slow. It feels like nothing is happening. And then all of a sudden, way down the road, something's definitely happening. But in the beginning, it's like you can't even see any progress. Even as much as I wanted to track it with a spreadsheet, it feels like nothing good is happening, even though it technically is. In April, put in another $75. In May, I put in another $60. In June, I put in another $150 or so. I'm steadily contributing to this thing, and our dividends are still only $5 per month, $7 per month. It's just not confidence inspiring. Then 8 months later, in August of 2023, I did a big lump sum of cash that we had elsewhere, moved it over into Robinhood and put $10,000 more into the account. Okay, it was $9,000 more. So my total went up to $10,000. And still, it's like a lag between what you've done and the results that you get from it. It's like working out or anything else. It takes a long time to notice the results. So then in September, I finally went from about $5 a month in dividends up to $73 per month, which is really great. And then I basically didn't contribute anything new until December. So I went a full year and only made really one big transfer into the account. But in December, I transferred over $18,000 more. So then that brought our total up to $28,000 as far as the money that I'd contributed into the account that was going to start earning dividends for us. And that's when we jumped from the $80, $90 a month area of dividends every single month up to sometimes $150 per month. That was in March of 2024. And ever since then, I haven't really sent in very much money. Up until this month where I put in $180, I basically just used any kind of contributions I've gotten from Robinhood signups, $5, $10, $20 a month to be the money that I put into this because I wanted to see what it would do on its own. Now it's got a substantial amount of money in there, around like 30 grand. So what does that do for us? And significantly, because I have dividend reinvestment turned on, I'm not withdrawing this money. I'm not buying burritos and race cars with it. How much is that drip program perpetuating its own growth? It'd be nice if it was as clear and as obvious as, oh, the dividend goes up by 10 or 20 bucks a month every single month, then you can kind of follow that and know where your trajectory is. It's a little bit trickier because a lot of these dividends are quarterly payers. So the 3 months in between the quarters, you get like a smaller payment and then boom, a big spike whenever that quarter hits, quarter one, quarter two, quarter three, that kind of thing. I realize I'm saying a lot of very obvious things like, of course, this is how dividends work. If you didn't know that before, then now you know what to expect whenever you're dividend investing. So covering those bases there for anybody who's not totally familiar with dividend investing. And then finally, at the end of last year, almost the 24-month mark, we hit one of those Q4 quarter ending times whenever we got all the dividends, basically. So December of 2024, we got the biggest dividend month I've ever had, $206.50, which was a huge month for me. Obviously, not enough to live on. I can't retire. I can't go buy a Porsche GT3 Cup car and go race at Spa-Francorchamps in Belgium, even though that's where this picture is taken here. If you ever looked in the background of my videos, that's the corner that's super famous called Eau Rouge. Very epic corner. If you want to Google that later, you can. $206 a month is like not even one tire required to go and drive somewhere like that. So we've got a long way to go. And speaking of transparency, I'll put up a screen recording here of all the stocks and ETFs I'm investing in that are part of this dividend portfolio. You can see the ticker symbol and the number of shares. So if you're curious, you can do that math and figure out how much money is in every single one of these. And then right now, the display data is set to total percentage change. So my total return, if you will, for that individual ticker symbol. And then now I get to show you my beautiful chart that I made that shows my monthly dividend by amount. So this is charting ever since I very first started dividend investing back in January of 2023. And this is showing you what my dividend was that month. It's not showing you the total return. Like what's going on the screen over here is indicative also of the total gain. So like if there was a stock price appreciation or depreciation, that's reflected in these little green and red boxes. It's not reflected here in this chart. This chart is just showing you what the dividends themselves look like, the payments to me. And part of me wants to get really excited about this chart because it is going definitely up and to the right, which is what I want to see. I love seeing that trend line in the middle going way up and to the right. What this isn't necessarily conveying is a percentage return. Like, yeah, the amounts are going up, which is nice, but I also put in a bunch more money partway through. If you remember, I think it was like August, I put in another $10,000 or something, hence this big spike right here. Well, yeah, the dividend amount's going to go up because there's more money in there. That doesn't necessarily mean that the account is doing better or producing more income in and of itself. It's giving us more because we put in more. You know, it's like you put more logs in a fire, the fire gets bigger. Then there's another big spike here where I probably put in a big lump of money the month before that. But basically from that point on, there hasn't been a significant contribution. And so this is kind of where the independent experiment kind of takes off for me, where you can go, all right, from here on, it's just growing on itself. The dividend reinvestment program itself is buying more shares, having more shares gets you more dividends, and that snowball perpetuates itself. And so that's the growth that we're seeing from March of last year onward until now. And I like seeing two things. Not only are the peaks, the all-time highs getting higher, basically every quarter, which makes sense, but the lows are also getting higher. Like the lowest point that we hit in any dividend period here is also getting higher. So after that point of March 2024, our low was $55, then our low was 66, then our low was 97, then our low was 104. Like that range of low to high continues to go up and to the right, which I think is just very inspiring. Hence the continuation of the plan to keep dividend investing. Let's turn this up a notch in terms of risk and expected yields for 2025 going forward. We started that in January by buying Trin, and we're going to continue with that in the future. Here's a few more ticker symbols that I have my eye on. This is by no means investment advice. This is just something that I'm looking into. I'm doing research on these and I may pounce on in the future. I'm also looking at SPYI. SPYI is an S&P 500 high income ETF, and it's another one of these ETFs that generates income through a call option strategy. So they're using more advanced investing tools and techniques that I'm not doing myself, but I can pay an actively managed fund of relatively high expense ratio to do for me. Part of the big thing that I want to emphasize as I go forward making videos in the future is what can we do to invest that is a time ROI for us that makes sense as far as not having to necessarily become an expert yourself, but how to reap the benefits of something anyway. That's partially why I make videos, because I want to give you a higher time ROI. But in general, that's one of the lenses I use to analyze an investment, an account, a service, anything like that. Is it efficient for us as people that need to live lives outside of finance? We don't all need to be nerds about this. We don't need to be finance experts. I don't need to do the call option strategy myself and learn how to do that and risk more than I need to. I'm going to pay these people 0.68% of everything that I invest with them to do this for me, trust that they're going to be better at it for me, and then hopefully reap a relatively consistent 11.9% yield from doing that. Or at least that's the plan anyway. Hopefully they continue to succeed at doing that. Another one that I've got my eye on that has probably an inflated looking forward dividend yield because the price has gone down so much in the past is OXLC, which is Oxford Lane Capital Corp. You can see for the last 10 years, basically the stock price has been deteriorating. Hopefully that's not indicative of what's happening going forward in the future. But OXLC is a closed-end fund that again is managed by professional people who do this for a living, and they shoot for fixed income securities that are going to generate a large amount of income. Right now, the forward-looking dividend yield is 20.8%, which is pretty ridiculous. And they're doing this in relatively risky ways. Like they're investing sometimes in companies that don't have the best kind of track record. Like maybe they're a little bit hurting. And so as a result, the finance vehicles that they're using to maintain their businesses have to kick off a higher yield. They have to pay a higher interest rate to people like me and you because it's a riskier bet, essentially. The plan, at least for the future, is to take incoming money or to take drip income and reinvest it in these three funds and then in a few other ones that I'm partial to that are already in my portfolio and just try and ratchet up that risk a little bit more. I want to ratchet up the dividend yield, ratchet up the risk, and I'm willing to take that risk. It's not smart for us to have kind of the wishful thinking to believe that just because the number on the screen says they're paying 20% dividends, they're going to keep doing that for forever. And so I can count on a 20% dividend. So I should liquidate everything else I'm invested in, go all in on OXLC and get a 20% yield. I think it's kind of a ridiculous thing to do that because that hope and that plan isn't based on fact. It's based on me just wishing that that would happen. Like right now, I've got something like $36,000 invested in this account. If that was getting 20% returns in terms of dividends, it's kicking off every year, $7,200 per year in dividends. That's pretty ridiculous. $600 a month, but I don't have a crystal ball. I'm not a sage trader, an advisor, able to analyze this company and figure out exactly what's going to make them successful in the future and know with a degree of confidence it's going to happen. I'm going to play a little bit safer and just slowly ratchet up those risk levels. If anything, my goal with this series is to be a little bit of a guinea pig to show you what it looks like to do dividend investing, to be really transparent with you so that maybe you can see the risks that I take and decide what's a better risk for you. I'm less of someone to emulate and more of someone that maybe you can just learn from watching. So as an overall experiment for the last 2 years, has dividend investing been worth it? Or should I have done something else? I mean, hindsight's 2020. We could have bought Bitcoin. We could have bought Nvidia. We could have done a lot of different things that technically would have net us more unrealized gains than this. But that wasn't the experiment we're after. We're dividend investing here. So if I take the total amount of money that I've contributed to this account out of my pocket, money that I could have put somewhere else, $30,178 exactly. And the benefit that we got from that $30,000 just in the form of dividends, not in the form of unrealized capital gains or things like that are still in the account. They're paper. They haven't been realized or secured yet because I haven't sold those investments. This is just the dividends. It spit off $1,851. So that means my overall running dividend return that I've gotten just in the form of dividends has been 6.14%. Thus far for me, that is a wild success. Because even though interest rates and CD rates and high yield savings rates and all that stuff has been higher than ever, and it was probably possible at some point to buy like a Treasury direct government bond or something else that had a higher yield than this, the fact that I could handily beat every kind of savings account that I had access to is like the satisfaction that I was after here. This is like 2% better than high yield savings accounts are right now. And so it's telling me that the plan is working. This is functioning as a thing that is essentially a baseline, a savings account for us that's generating more income, more returns than a savings account was, not even counting the capital appreciation, not counting the growth of those stocks. The actual growth is like the cherry on top because the actual account balance, the value of the invested things that are in here are over $36,000. And I've only put in $30,000. So if the math off the top of my head is right, that's like another 20% gain on top of that that's not realized. It's overall, it's over the course of 2 years. It's not over the course of 1 year. But even with all that factored in, I'm really happy with those results. Dividend investing thus far, worth it. What's also worth it is watching this video next, and I'll see you next time. Bye.